Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be focused on the next 14 days or so. Now that we're coming towards the end of the current 60-day cycle, I'm going to be looking at some of the levels that we can expect Bitcoin to come back down to run into the end of the cycle before we start a new 60-day cycle and then to go on to make much higher levels. So I'm going to run down on the various time frames to show you exactly what's happening with the Bitcoin price and why my narrative is that for the next 7 to 14 days, we may well be having some sort of a pullback on a balance of probabilities. I'll also be having a look at the liquidity heat map to have a look at exactly where the price range is for Bitcoin over the next 24 to 48 hours and to have a look at what's in the news which may well be driving the Bitcoin price. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. As per usual, I'll go straight into the main theme of the video, and that is that I'm going to be expecting some sort of a pullback over the next 7 to 14 days, and the reason for that is that we are coming to the end of the current 60-day cycle, which I'll go through in much more detail a little bit later, but I'm going to be running down on the various time frames to show you exactly why my narrative for the next 14 days or so is going to be more to the downside rather than the upside. And apart from the fact that we're coming towards the end of the 60-day cycle, we did get a signal yesterday at last night's close for the weekly candle, which is this shooting star candle. Some people may call it a gravestone doji candle or even a low wave spinning top. But whatever you want to call it, this is a bearish development, and that's actually fine because what we've just had is a big move to the upside. So you would expect some sort of a consolidation after a big move to the upside, as we've just had up to the 123,000. And also because this has now happened at the end of a 60-day cycle period, this is providing the confluence that we may well be having a period of consolidation in the next few weeks. So I'm going to work down the time frames starting from the monthly time frame to build up a narrative of what Bitcoin may well be doing going forward from where we are currently. But before I get into the meat of it, please always remember, and I have to keep reminding people, just so that everybody can be on the same page, we are in a space where this is a game of probabilities. There are no certainties, there are no guarantees, nobody has a crystal ball, nobody knows where this is going to go. And as I've often said, I don't even know what I'm going to have for lunch today. So nobody can tell you where this is going to go. This can go upwards or sideways or downwards. However, we do know that the chart leaves clues through its indicators, its oscillators, the price action, the candlestick patterns, and everything else to give us some sort of a direction in terms of a balance of probabilities of which direction it wants to go. And this is what I'm here to present. And so please take whatever value you can from it. Because today my narrative is going to be a little bit bearish for the shorter term, but you'll see that for the longer term, we are still very much in the throes of the final stages of the bull market. But this video is more about the short term of what I'm expecting because of the various cycles and the signs that I'm seeing. But one thing we know with Bitcoin is that it can do anything. For all we know, we could get a God candle here just in 1 or 2 days, and this can fly up to 150, 170, 180,000 if it wants to do that. That's a possibility. But we know that the probability of that is quite low. So please bear that in mind when you're listening to this video to try and get the most out of it as possible. So here we are on the monthly time frame. One thing we have to notice here, while the price has been making higher highs, we are still on the RSI still making a lower high here. So there is currently a bearish divergence still going on. However, as I mentioned in previous videos, all we would need is for the next few months candles to start moving in a big upward movement, which is what we would be expecting at this stage of the 4-year cycle. And then this RSI would move forward to the upside and negate and invalidate the bearish divergence here. But it's certainly something to bear in mind that at the moment, currently, we are in a bearish divergence. But when you look at the full chart here, from the beginning of the current cycle here, at 15,400, you can see that it's making an incredible stepwise move all the way from then all the way to here. We keep making staircase movements, and this is exactly what we're doing now. We made another one here, but obviously we're going to have some sort of a consolidation before we move to the next stage. And if we put on the 8 exponential moving average, this is our average that we're going to be utilizing, that when the price goes wherever it goes to here, between 150 to 500, which is our target levels, the blue line here, the 8 exponential moving average, and obviously the blue line will move up with it, but as soon as the price closes below the 8 EMA, i.e. the cross here, and the price closes below the 8 EMA on the monthly time frame, in the past, as I've shown you many times, I don't want to go through old ground again, but that will be one of the signals for the end of this current bull run here and the start of a bear market. So very important to keep an eye on this blue line as the price for Bitcoin keeps going until the end of this year when we expect the bear market to start. So just keep that in mind. We've zoomed out on the larger time frame to give you the overall bigger picture of what's exactly happening and what may happen, or what the most likely thing to happen towards the end of this year. And moving on to the weekly time frame, as I've just shown you, the shooting star candle here is giving us some bearish signs that maybe over the next week or so, and it may only last 1 week or 2 weeks, but as we'll see with the 60-day cycle, we'll get a much more accurate picture of how long this possibly may last in terms of a consolidation before we continue the upward surge to higher levels. But as we can see here as well, we're just about losing the divergence that was here. So we've made the higher high here at the price from this level at 112 all the way up to 123. So we made this higher high, whereas on the RSI, it was actually quite flat. So it's still currently just about a divergence taking place. But as this moves forward in the next month or so, then I would expect the RSI to move forward and invalidate the bearish divergence. And it's always very useful on the weekly time frame to look at 2 other simple moving averages apart from the 8 EMA. So you can see quite clearly the 8 EMA, the price action is well above it, so nothing to worry about there. But what I want to do is to show you the yellow line here, which is the 21 simple moving average, and the white line here, the 50 simple moving average. But also a little bit lower than this, something very interesting, which we should always keep in mind as we come towards the end of the bull market in a few months' time, where the 200 simple moving average line is at the moment, because this is going to determine possibly the end of the next bear market, i.e. where the price action when we get into the bear market is most likely to fall down to in terms of a ballpark figure. So currently, as we can see quite clearly, on the weekly time frame, the price action in the previous cycles has always followed 21 simple moving average as well as the 50 simple moving average. And this cycle is done very similar. And what we see here quite clearly is from the end of 2023, when we recaptured the 21 simple moving average, we found support on it numerous times, and when we lost the support of that, it actually found support on the 50 simple moving average numerous times. And you can see this happened clearly here as well. Just a few months ago, when we broke down to the $74,000 mark, we broke through the 21 and then once again found support on the 50 simple moving average. And since then, we've recaptured the 21 simple moving average. So what we should do is to find support quite easily back on the 21, which is currently at around about the 100,000. So we do expect this to carry on. And for this, even when the pullback occurs, we shouldn't fall really below the 21 at this stage of the 4-year cycle where we're coming to the final few months of the bull market. And only time will tell whether that happens. But this is what our narrative would be based on the patterns and the price actions and the various simple moving averages, which seem to be well respected by the Bitcoin price. And one thing we can see with the 200 simple moving average, this is currently at $50,000. And when we zoom out, we can see how this particular simple moving average has been respected by the Bitcoin price. So we're zooming out on the weekly time frame on the 200 simple moving average through all the cycles of Bitcoin. So obviously being a 200 simple moving average, it's taken many weeks for it to start. So this is where it started. And if we move this down here, we'll know exactly how much respect the Bitcoin price has given to the 200 simple moving average on the weekly time frame. So this is where the first 4-year cycle ended, i.e. this big move to the upside. And that finished here at the end of 2013. And then the bear market came all the way back down and found support right on the 200 simple moving average. I'll change the color there so you can see the contrast. And in the second cycle, once again, we went up towards the end of 2017, and then in the bear market, we found support right on the 200 simple moving average. Not only at the end of the bear market, but also at the COVID-19 rundown that we had all the way back here. Obviously it went down a little bit lower, but this was a very good ballpark figure of where it would have been a good time to buy back into Bitcoin, as we saw what happened afterwards. But in the last cycle, because the expectation was to this point here on the 200 simple moving average, which at that time was at 22,000. But what we know is that this fell down further to 15,000. But even if you'd bought Bitcoin at 22,000, that would have been a good buy now, considering that we've gone up to 123,000. So you can see quite clearly that apart from the last cycle, where the price fell to much lower levels than the 200 simple moving average, in the previous cycles, we found a lot of support on this level. So this line currently is at 50,000. And depending on how far Bitcoin goes from where we are, will determine how high the 200 simple moving average is going to be going to. So if we do get up to about the $500,000 mark, this is going to move a little bit higher to maybe 60,000, 70,000. So that will give you some sort of a rough idea as to what we can expect at the end of the next bear market based on the historical perspective that we've seen in the Bitcoin price action. So this is how these three simple moving averages on the weekly time frame are incredibly important to analyze Bitcoin in terms of its future price action based on the historical perspective of how the Bitcoin price has respected these three levels on that weekly time frame. Now I'm going to look at the daily time frames through the eyes of the 60-day cycle and to make head or tail about this bearish close that we had last night. Okay, so I'm going to move down to the 60-day cycle template that we use here to make head or tail about Bitcoin and how it fits into a time trend. And for those of you who are new to the 60-day cycles and find this a little bit complicated, the simple way to look at the 60-day cycle is that what it introduces into the analysis is the element of time. As the inventor of the 60-day cycle and other cycles, Walter Bressart, as he mentions here, there are many tools to help improve your trading, but only cycles will allow you to add the element of time. This is the most important thing here. What we're doing is we're looking at the Bitcoin price by introducing the element of time into the trading, and Bitcoin seems to follow historically three particular time cycles, and that is the 4-year cycle, the 26 weekly cycle, and the 60-day cycles. They all fit into one particular frame. And what we'd cover here is the 4-year cycle and the 60-day cycle, so we can have a look at the shorter term as well as the longer term. Quite often I get comments that they don't understand cycles, and so hopefully that explanation will give you some sort of an insight. All we're doing is that we're fitting in the price action of Bitcoin and making head or tail of it based on a template which it seems to be following since its inception back in 2010. So here is the current cycle, which began on the 5th of June. So when the new cycle starts, that means that the old cycle finishes. So the old cycle finished here on day 59, which had started back here. And the cycles usually have a 10 or 15 days either side of the 60-day period. So the current period from where we are now, having started the cycle on the 5th of June, the 60-day cycle takes us to the 4th of August here. So this would be the normal period. But of course, what we know is that Bitcoin can come to an end of the cycle early or a little bit late before the new cycle starts. So what we're really looking at is a rough time period of about 60 days. And currently, so from the start of the cycle to the current day today, Monday, the 21st of July, we're on day 46. And when we look at this particular candle, this shooting star candle, which occurred on the 14th of July, this gave us some sort of an idea, a clue that maybe we've topped out in this 60-day cycle. And then the current consolidation that we've had, even though we made numerous attempts to get above it, and we could quite easily have gone above that, but we have failed to get above the 123,000. At least it looks like that in this cycle. So the probability has now shifted that we're now in more of a decline that we would expect into the end of the current 60-day cycle. So if you look previously, just to give you an explanation of that, whenever we come to the end of the cycle, we get some sort of a decline into the cycle, and then that becomes the beginning of the new cycle. And this happened here as well, and this is what we're expecting currently here as well. So we're coming to the end of the cycle in about 14 days time to the end of the 60-day period, and it looks like with a higher probability, please remember this is a higher probability play, so there is a smaller probability of the price doing this. It's unlikely, but the possibility is there. So this is what we're looking at, a higher probability play that we've topped out here on the 14th of July at 123,000, and we're now in the time band of a pullback into the 60-day cycle where we should start the new cycle. So what I'm going to do now is to look at the levels at which the possibilities are for Bitcoin to come back down to in this consolidation and the decline into the end of the cycle. But one thing we should always note is that as we're getting deeper and deeper into the 4-year cycle, we are getting the right translated cycles, which are telling us that the underlying trend is still bullish and to the upside, and that we can expect with a higher probability for the price of Bitcoin for the next few months anyway to start moving towards the end of the cycle and the top that we're expecting, which can be anywhere in the range that we've been looking at between 150 to 500,000. So this is what we've had so far. So this is what we've had so far in this cycle. The cycle started here. The white line is the midpoint, and the red line here is the end of the cycle. So these cycles are divided into the start, the middle, and the end. And what we normally always get for a right translated cycle is that before the midpoint here, we made a high, we made a new higher high. That means that's a right translated cycle. And the meaning of that really, what it says is that the underlying trend is to the upside, and that we can expect when this cycle comes back down for us to more than likely, with a higher probability, break the previous high here into the next midpoint and then make another right translated cycle, being in the time band of the end of the 4-year cycle. But simply put, we are in an uptrend and we should be seeing higher prices going forward in the next few months. And if we look on the daily RSI here, we can see that we seem to be running back down to these levels. So what I would expect, now that we're in the end of the 60-day cycle period, we should run this down to probably the 50 RSI, and depending on how deep Bitcoin wants to go, it has a decision to make at that 50% level. And if it wants to go deeper, then obviously it's going to go down to the oversold territory here at 30. But many times it will bounce off the 50 and come back and end the cycle here for higher prices later. And as per the title of the video, we want to have a look at the levels at which the Bitcoin price can fall down to. Okay, so I've got some markings on my chart here. First thing to notice is that we are in a descending channel here, and that is actually quite healthy because we've had a big move to the upside, and a downward sloping channel is usually a bull flag, which means that this is a continuation to the upside. So we would expect with a higher degree of probability that somewhere along the line here it's going to break up above this trend line and make the higher levels as we go forward. So that's the first thing to remember. We're actually in a bull flag or a bull pennant, whatever you want to call it. These are just shapes and sizes. But the main thing is it's bullish and a continuation pattern to the upside. And the second thing is to find out the levels, and to do that we'll always use the Fibonacci tool, and that is that if we have a look at the previous low, this will take us down to this level here at around about the 107 level. You can see quite clearly we bounced off numerous occasions at this level. So this was the previous low that we had before we had this bull flag here. So if we make a measurement from that point to the top at 123,000, the first level that we are at currently is the 38.2, which is at 116,000. The 116 has held up very strongly so far, and I would expect that now that we're coming towards the end of the 60-day cycle, then this target of 114 is very much on the table, which is the 50% Fibonacci level. However, the higher probability play here is this one here at the 61.8, and this would make the most sense because the previous all-time high to the 123,000 was this one here at 112,000. So there's a confluence of that high plus the 61.8 Fibonacci level. So the 112 seems to be the most likely, the most probable level from which Bitcoin should be able to bounce off at the end of this 60-day cycle in the next 7 to 14 days. I've also got the lower target here of the 78.6. because oftentimes Bitcoin does come back to that, and 110 would make sense because when you look left here, we made 110 here at this point with this candle on the 3rd of July, but if you look left here, 110 around here, and some of these, and the resistance here was around about 110 as well. So the 110 at the 78.6 Fibonacci level would also make sense. So anywhere between 110 to 112 would be the most likely pullback decline that we can expect in this 60-day cycle. So this to me is the highest probability play over the next 7 to 14 days. And if Bitcoin did decide to come back below the 50% on the RSI and go deeper, then you can see the deeper levels are here at 107,000, and then the 103,000 all the way back to 101,000. This to me are low probability plays, so I really don't expect Bitcoin to come back down to these levels. But of course, we know Bitcoin can do anything, so always keep an open, fluid and flexible approach and just base everything that you know about Bitcoin on the basis of probabilities, where the higher probability is, at the same time as knowing that the lower probability can also play out. Okay, moving on to what's going on in the news so that we can keep abreast of what is driving the Bitcoin price. And we've got the latest news here with this particular news story here saying that Bitcoin gets to 125,000 target as trader sees big move. So we've been to 123,000, but obviously after the end of the current 60-day cycle, 125,000 is definitely on the table. And we also have this particular article here from Robert Kiyosaki, who is of the Rich Dad Poor Dad fame. And it's an important point he's making here. When asset bubbles will burst, and when they do, the odds are that gold, silver and Bitcoin will bust too. So what he's really saying is that those people who think that this bull market will continue for Bitcoin and for gold and for silver, even if the markets are going down, that doesn't seem to be the higher probability play. The chances are when the SPX and the Dow Jones and the Nasdaq, when they pull back, the chances are that gold, silver and Bitcoin will also do the same. And I would tend to agree with him there. Okay, moving on to the liquidity heat map. And the current levels this one's giving is here at 116,000 on the lower levels and all the way up here to about 119,800. And we've already been to that level today at just over the 119,000. So it may well be that we're now moving towards that 116,000 target. Only time will tell which way it wants to go, but the narrative that I've built up today shows us that in the short term, it looks like with a higher probability that the Bitcoin price will be moving more to the downside rather than the upside. Okay, I'm going to move on to one of the requests I got from the last Monday's video, and it's a request that I've had quite often from many of the subscribers here. And by the request, I mean this particular type of comment here. So I've had this type of comment on and off for the last 12 months or so, and it's really saying, is there a tutorial or an introductory video for a minor ratio trade, as it sounds interesting. So earlier on today, I did post this for all the subscribers here, that while I was doing this video from this morning, that due to requests over the last year from subscribers wanting to learn about ratio trades, I have also posted this morning the private members introductory video which explains the ratio trades. And what I'll do with this particular video about ratio trades, I will attach it to all of my Monday videos in the description box, so those people who are interested in learning about the ratio trades can do so. It's more of a learning than anything else. You don't have to join the private members because of it, as I know that there are many traders who watch my videos and they can use that particular video as another angle on their trading. And as I mentioned here, obviously if this is not something you're interested in, then obviously please just ignore the ratio trades video. And this is the one I've just posted this morning, the new members introductory video. This was done about 2.5 years ago for the private members only. So for the benefit of those who are interested in the ratio trade and learning about ratio trades. So to save you a bit of time, when you click on this, to save you a bit of time, the ratio trades part of the video starts at around about the 8 minutes 50 seconds. So these are the ratio trades that we've done in the private members section. And as you can see from the profit and loss figures here in the blue, these are all the profits that we've made so far in the trading portfolio that we've been running for the last 2.5 years. And just to give you an example of the last trade that we did, which we closed on Friday, I think it was. This was the trade that we did with Canaan, and that was a 70% profit from 30th of May when we got into the trade, and then we got out on the 18th, which was on Friday. And that was based on the ratio chart between Marathon and Canaan. If I just give you an example of that, we've been monitoring this particular chart between Marathon and Canaan. They're both Bitcoin miners, and what we saw was that the Marathon price had run up into this resistance point by around 240% against the Canaan price. So to do ratio trades, you obviously need to be in one of the assets here. So if you're in Marathon, you can run it up to this point here, and you can see quite clearly that we've run into resistance based on the historical perspective of this particular chart. And the chances were, with a higher probability, that this is going to run down. And then at the top of this trend, into resistance, we found this shooting star bearish candle at the top here. And this is what prompted us to go from Marathon into Canaan, because it looked like a high probability play. And as you can see quite clearly here, the price came all the way back down to these levels. And on Friday, we pulled the trigger and took the profit of around about 70% here. Now, of course, this can go much further down, but I have a strategy that whenever there's some sort of a reversal, I will rather take the profit than to risk losing that if the price moves against us. So this is how the ratio trades work when you're really moving from one particular asset, in this case from Marathon, into Canaan. And then, while this particular trade I'm going to be holding as cash until the end of the current 60-day cycle, and then when the price is pulled back for all the Bitcoin miners as well as Bitcoin, I will look for the other opportunities after the pullback before moving into another asset to move forward with that one. So I hope you'll watch that video, because it will give you all the objectives that we have at the private member section, where we run the long-term portfolio as well as looking at the ratio trades and the swing trades which we've done in the past. And if that's something that's of interest to you, then all you have to do is that below all of my videos there's the join button there, and in the description box there's also the Bitcoin Miners membership join link on the red button. When you click on that, so you'll see that for the price of one coffee per week, which comes to about £12.99 per month, you'll have access to all the ratio trades as well as looking at our portfolio. So you can see currently with the Bitcoin miners, if you look at the videos here, we often do videos where we're looking at the ratio trade opportunities coming up. So in the posts here, before we actually execute any ratio trade, I always bring the opportunity to everybody's attention in the member section well before we execute it. And I'll leave the messages here or in the members videos, which we do twice a week on a Wednesday and a Friday. So once everybody's been alerted, then all the members are free to take whatever the opportunity is, or if they decide not to, and many of them don't, I think well over 50% of the members don't take any of the ratio trades, which is absolutely fine. Many of them come for the videos in terms of the extra analysis they get for Bitcoin as well as the Bitcoin miners. And many people just want to follow the portfolios, which currently, where we started with 100,000 back in January 2023, we started with 100,000, and that's now grown in our two portfolios that we have. One is a passive portfolio, which has grown to 506,000, and our trading portfolio, which has now grown to 574,000. And our target, which may seem a little bit stretched at the moment, at 5 million. But as I've said many times, even if you make 1 million or 2 million, starting from 100,000, that's not a bad outcome over a period of just 3 years. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.